Okay. Firstly, happy Wednesday. Secondly, my window is open with the AC on. Yeah. How stupid is that? Well, I am experiencing a very bad allergy sinusy type of a December month. Not sure if anyone else is in the same boat. I'm not sick by all means. It's just that some days, like, my throat and nose is killing me, and then, like, the next day it's totally fine. Today, it's one of those days. We have a lot of stuff to talk about. As always, if you enjoy these videos, please smash the like button, completely free. Subscribe for future content as well. Short-term goal, would love to gain or get to 100 subscribers. Long-term goal, let's shoot for 500 and then 1,000 eventually. Okay, so straight off the bat, ADP data, employment data came out today. Not really the best. Private payrolls dropped 32,000 positions last month, slowing the job market. So this is really, oh boy, burpees. Whoo, taste my bacon eggs for breakfast. Oh, we don't edit around here. Also, we speak our minds. So, apologize in that notion. I'm a real person, not a editing little puppet doodle. Um, Bad data is good data for Federal Reserve rate cuts, and right now it is 10:39 a.m. in the morning Eastern Standard Time. So this data came out 2 hours ago ish, and was going to make a video a little early talking about this, but I kind of said, hey, let me have the market kind of really digest this, and that's primarily what we're seeing right now in the markets, like, overall. Real quick, before I switch off this data here, as we see, yeah, so 32,000. Tomorrow we have initial jobless claims. Maybe hearing from another Fed chair spokesperson, because last week we ended up getting two that said, I believe one was Waller, that ended up saying, yeah, we're going to be doing an interest rate cut for December. So right now markets are pretty much just like banking on a rate cut. PCE should be coming in line, but once again, this is bad data for the economy, but this is good data for rate cuts. But therefore, if the economy goes like south and down, to Chinatown, um, it's obviously not going to be good for the stock market overall. But then a lot of people have been arguing we've been in a rolling recession for the last 2-3 years now. So the stock market is going to go to all-time highs and pass it if we go into a recession. But the recession is going to be hit in the it is going to be hit in the labor market. So what a lot of people are saying is that if we go into a recession, the stock market is going to soar, but the overall economy is going to go down. So what would that look like? Well, it would look like pretty much what happened in 2023 with big tech. Big tech led the major indexes to go to all-time highs. So we had the Mag 7, not really sure if they're considered the Mag 7 anymore. There's some talks about other companies potentially entering into the Mag 7. But you had the Mag 7. You had, let's see, you had Meta, you had Google, you had Amazon, you had Nvidia, you had Tesla. What's the other two? Microsoft, and I'm forgetting one. Microsoft. It's another gigantic one. Can't think of it right now. But you had those 7 companies leading the stock market. And I mean, 2026, it was pretty funny because, like, the stock market was going through a downward spiral because a rate hike, and the overall economy was, like, booming away. So we could very well see the opposite thing happen, or I mean, it could just be everything could massively. But what tends to happen is that the overall market stock market tends to recover quicker than the actual like economy per se. And that's why a lot of people are saying that we are in a rolling recession and the actual labor market has not really recovered just yet. Morning water cheers, by the way. Real quick before getting into SoFi, and this video is going to be primarily dedicated to SoFi here, but we got to talk about some economical data because SoFi is a lot driven by economical data. And a very large percent of SoFi's business comes from lending. So therefore, if the economy gets hit, yeah, SoFi's overall business is going to be hit. And I'm a raging SoFi bull. Going to be talking a little bit at the end of this video about my public account and where I see some of these stocks moving forward. Probably going to save that for the end of all my videos and stuff. But before we get into SoFi here, want to go ahead and talk a little bit about before we talk about Bitcoin, let's talk about the VIX here. So on a 5-minute time frame here, we see the VIX basically spiked up early this morning around 9:05, and that's basically because there was a dip in the market. The market saw this data this morning as being very bad for the economy, but now it's recovering because it's saying, wait a second, this means like follow-on rate cuts. This could very well mean a bigger rate cut maybe in December, and also maybe more rate cuts being secured throughout January and all of next year. There's even some loony bins that are saying that Jerome Powell is going to resign ASAP, and because President Trump did name, it has been really pushing like for a new Fed like chairman. So that's also as well. But I mean, overall, the VIX, it pretty much has recovered from last week. We are back down in this pretty much bottom range area. Obviously, I mean, last summer when nobody wanted to buy stocks, yeah, ironically, you had like the VIX. The VIX is very inward data. Whenever the VIX is super high, you want to be buying stocks because this is Liberation Day back in April. This was the Japanese carry trade back in August last year. You got to be buying stocks. But at the same time, if the VIX is super low and no one is interested in buying stocks, that is also a signal too. I was buying stocks all last summer. Nobody wanted to own stocks. No one. But the volatility in the index was super low, and that's like the best time to buy stocks when nobody wants them. Okay, now moving on to Bitcoin here on the daily time frame, we are seeing a very strong, in my opinion, recovery. We had a low, the 21st, down right. Didn't break 80, but it was at 85, 80,500 it held, and then we made another higher low of 83, and then we have just been bouncing. So as long as Bitcoin, if we can really, the 100-day moving average is at 100K. That's a solid 10% move on Bitcoin. We don't have to make this move all at once. By all means, we could be after the Fed rate cut. So in about a week-ish, move back up to get to the 50-day moving average and just kind of stabilize the moving averages here. I am a long-term investor in stocks, but at the same time, I am very fluent in technical analysis. And technical analysis does matter because you can use technical analysis to predict long-term investing. And Bitcoin is a hedge on the NASDAQ. And as long as Bitcoin gets above this, really, we got to really get above 100K. And then we're going to really see a lot of stability, in my opinion. My opinion, not a financial advisor here. And the reason I'm making this call that Bitcoin goes to 100K and there's going to be a lot of stabilization is because that's pretty much where we fell off from. We fell off from 100K at the beginning of November, and stocks overall just been going down. So if Bitcoin has recovered from a couple weeks ago, that means that like these stocks are gonna be making a solid recovery. And there's arguments that you can say, hey, these stocks have already kind of very well already done that. So that's my really spiel on Bitcoin. We just got to keep an eye on it. Got to keep an eye on everything here. Okay, so to really go into SoFi, because this video is primarily dedicated to SoFi, and I'm a raging SoFi bull. What makes me get so fascinated by SoFi is multiple different reasons. One is that they are a disruptor of a company. So picture that you are looking at a sector to start a business in, and that business could very well be let's let's go ahead and talk some food today, some dietary food related talk. I am a very big advocator in healthy living, exercising, functional medicine. I actually went through some health problems in the last year and a half. If you saw my videos from last year on this channel, I ended up stopping making videos for about a year because it ultimately came down that I was eating too much sugar, but I wasn't gaining weight to become obese, but my sugar habits were affecting my health. And I had to go on some low carb diets to pretty much correct it, a ketogenic diet, and also a carnivore diet as well. And I completely reversed my issues. No drugs, utterly amazing. So let's say that you are in the food industry and you create a product that cancels out what all these different companies are doing. So let's go ahead and say that you are a fast food industry, and like there's multiple fast food chains. Without naming any names, we can probably say that there are 10 businesses, 10 franchise publicly traded companies that are in the fast food industry. Okay. Now you come in as a publicly traded company within that sector, but you are a disruptor. You create not a fast food restaurant, but you create a like low carb restaurant. Low carb restaurant essentially is no bread, no grains, no pasta. You're eating non-starchy veggies, so no potatoes, no starches, no ice cream, no sugar. If you want homemade ice cream, you take 1 cup of heavy cream, 2 eggs, you blend it together, and you got like real ice cream. Or you can go ahead and take half a cup of blueberries, maybe a quarter cup of strawberries, put it into a blender, 1 cup of cottage cheese, or 1 cup of yogurt, 1 cup of heavy cream, blend it on up, stick it into your freezer. You got some natural ice cream. It tastes amazing and phenomenal. No sugar at all. So your restaurant does that, but it provides a fast food environment. So I go in, or rather, you come into my business, my restaurant, and I give you food that is cooked very quickly. 100% grass-fed beef, organic pasture-raised eggs, and I go ahead and I go ahead and give you a fast food that is the healthiest option. I am a disruptor. So that's what SoFi is. SoFi is a disrupting company because they are a lending company that has no banks, no virtual like brand. It's all virtual. I'm a veteran. I did a lot of time in the United States Marine Corps, and to this day, I still use military banks. I use Navy Federal Credit Union. I use USAA, and Navy Federal Credit Union is actually not near me at all. Um, and because of that, they are pretty much a hybrid bank. If I need something from them, they will mail it to me for free. I don't have to physically go in for anything. I have not physically gone into a Navy Federal in, oh gosh, years. Actually, maybe like a decade, to be perfectly honest. Um, I've actually never been inside a USAA like branch. I don't even know, honestly, off the top of my head, if USAA even has branches. SoFi is not a hybrid. SoFi is 100% online, and it's attracting a lot of people in the newer generation, Gen Z. Yeah, I mean, I'm a millennial. I'm 37 years old. Yeah, like anything tech is going to attract me. Um, I have social media, small businesses, side small businesses, um, very big attracting in the tech world. So as we see the boomer generation die off, and I know that sounds terrible, there is no nice way for me to really put it, or rather, maybe that's just my marine self being a blunt asshole. That probably is true. Um, very blunt at times, but that's who I am. When the boomer generation fully leaves this planet, we are going to see a massive shift. A lot of store locations are just going to just literally shut down, or they're just going to be used for inventory. I love Macy's. I remember 2018. I was actually doing my undergrad at the time, and I did Macy's as a marketing project for my bachelor's degree in marketing. And I remember Macy's, people were scared shitless because they're like, hey, is Macy's going to go bankrupt? Their stock was declining. And Macy's has utterly turned their business around because they just use their stores as inventory. They have ramped up their online platform, online sales. And to be honest, I do shopping at Macy's all the time from their online department. I ended up getting some suits last year, and in the year prior that was ridiculously low sale. I've ordered stuff from Macy's online. I thought it was my size. Ended up calling them back saying, hey, can I exchange this? Totally free. Exchange it, and I get a brand new set. Phenomenal company. SoFi is that company and that disruptor. So I see the 10-year vision on SoFi, and that's what made me get excited into SoFi here. So SoFi, they have the crypto launch, which is going to be this month. Man, SoFi crypto launch, unprepared once again. SoFi crypto launch, relaunch cryptocurrency trading on November 11th. I thought they were doing something in December. Maybe I'm wrong here. Okay. I could have sworn something with crypto was going to be in December. Yeah, I guess I'm wrong here. Okay. Oh, wait a second. Never mind. Phase rollout here. Hold on one second. So, their launch date was 11 November. Okay, yeah, they announced it. SoFi's members buy and sell crypto. Available at launch. Yada, yada, yada. Phase. The end of 2025. Promotional incentives. Okay. Maybe they... Honestly, maybe they already have it. I honestly thought we were getting crypto in December. Well, my head is up my bum, I guess. Okay, anyways, regardless, unless SoFi pulls something out of a hat, the big catalyst for SoFi is one, going to be December 5th, this Friday, for S&P 500 Inclusion Day. If SoFi does not get included into the S&P 500, we could sell off a little bit, which is really unfortunate, but so many people in SoFi are talking about this, and it's giving me a little bit of anxiety because it's like, okay, I'm over here looking forward to it as well, which means a lot of other people are looking forward to it as well too. If we don't and we end up getting into the S&P in March, it could prompt a sell off by a bunch of people that are just not here for the long haul. Um, I'm here for the long haul, and by all means, if SoFi goes below $25 again, I'll throw more money at it on my public account. But um, or it really maybe doesn't even do anything. Hey, that's the possibility too. So this weekend is going to be a catalyst for SoFi, especially next week. Next week with the rate cut is even going to be a bigger catalyst, and we're primarily seeing SoFi here. We scroll back to really like the last week on the 5 minute time frame. 5 minute time frame is really key. We're seeing a solid, pretty much from last week, just a trend higher, which is really good. Trying to get back to obviously all-time highs here that we hit at beginning of November, and before we basically just pretty much pummeled down. But the biggest thing on SoFi is that once we get through these all-time highs, and if these catalysts... Oh, speaking of the devil, key factors eyed for the S&P 500. This bothers the hell out of me because now, and I do want to actually get into some options for SoFi, some long-term leap options. But the big thing for me is primarily just getting some of these stuff out, because options, it's a little different. Yes, you can dollar cost average in on options. You definitely can. Leaps are definitely really a lot more safer. But at the same time, everything pretty much is like crucial, because if something stupid were to happen, it can definitely impact other than holding shares here. But once we get above this area, going from 32 to 45, $45, Anthony Noto has a stock compensation plan. The stock can rip up very, very quick. So the way that I really see it, and what makes me comfortable getting into SoFi or being a shareholder of SoFi, is really, one, it's a disruptor company. Two, the catalyst for this company just keep on rolling. Like, we have a tech platform on SoFi's business model, Galileo, and Anthony Noto has stated that we have numerous number of contracts. We just really haven't, we can't talk about them just yet. So imagine if like a big bank uses SoFi's like platform. That's insane. What we are truly waiting on, and to be honest, what I'm waiting on, because it can change a lot about this company, and I want to make a separate video on this, is really what Wall Street is going to do with this company. Is Wall Street going to see this company as a fintech like Robinhood, or are we going to get a hybrid multiple like a bank? Or is Wall Street going to screw us and give us a bank multiple? A bank multiple means that we're not going to have a crazy high evaluation. A hybrid multiple means that we can have a high valuation, but it really depends around growth. Like, for example, our earnings, as you see, obviously our earnings are very similar near Robinhood. Oh, we're $300 million off. But Robinhood trades richer because they have a different multiple in their business. So I'm not saying that SoFi is going to go to $100. Some people would love to say that, but it really depends how Wall Street views it. Obviously, Palantir, I mean, look at their revenue, but they have a AI like evaluation, which is crazy here. So they trade at a richer level. That's what it comes down to. Wall Street needs to make up their mind, and I think ultimately it's going to be on the management team of what truly happens. Until Friday, honestly, we could very well like just hover right below all-time highs, If we get into the S&P 500, my prediction is that we're going to bust through all-time highs. And then next week with the rate cut, we're going to bust through that. We very well could have a massive rally going into earnings come time in February. It could happen. If we get another rate cut in January, that could also be extremely bullish too. So a lot can really happen. I know that I spoke and rambled on for the last 25 minutes. Hopefully you all enjoy my commentary. If you don't, let me know down below if I talk too much. But then again, have to cover pretty much all stuff here. Public account right now, doing a public account challenge for anyone that doesn't know. Taking roughly around $30,000 and going to be growing it over the course of 12 to 18 months to six figures, 100K. Very possible, very easy here. So today we're up almost 1%, which is good. Account overall is up by 7,800. Account holdings, I have not bought any new stock today. Adobe I spoke about in my last couple videos here. I really should have done this public account challenge on Robinhood. Would have been actually it's a little bit easier here. Okay, I should be able to actually, hold on. Can I move this? Oh, yes. Okay. This is actually a lot better here. Hold on. I gotta readjust some stuff here. If I do a second public account challenge, it's going to be on Robinhood. Even though Webull is phenomenal for day trading, but like the overall look of it, it's not really the best in my opinion. Okay, it kind of looks like Linux operating system. So Adobe I've spoke about. I'm not looking to add Adobe anytime soon. Adobe's earnings are coming up next week, I believe on the 11th. I'll cover them. If Adobe dips, I'll add more shares. If they start going up a little bit, honestly, I'll probably add some more shares. I'd feel comfortable to maybe a $4,000 position now in Adobe. I got quite a bit of cash left over, $4,100. So throwing another $1,000 at Adobe, I feel confident. Honest Company is really a risk play. We're already up by almost 10% here. If Honest Company does go to if Honest Company does go up significantly to maybe 60, 70, 80% here, I will honestly probably sell out of my entire position and take my profits and put them into AMD. I spoke a lot about AMD on this channel. Meta is actually doing some pretty solid recoveries. I'm good with Meta. AMD, I'm going to be adding more shares maybe if they continue to be in this low level range. If they go below $200, I'm buying more. Robinhood, I'm good. This is one that I wish that I was more aggressive, but it is what it is. I'm up 19%. They're doing a solid V-shaped recovery. If Robinhood after their earnings continues to go all-time high, I'm just going to be a holder. But once they get to a point, I'm probably going to start taking some profits because, once again, I see AMD 4-5xing in the course of 3-5 years. I don't think Hood is going to be doing the same. Now, can they double up? Can they go from one? What's my price? Average price 158. My cost basis. Can they get to $300? Yeah, in the course of the next couple of years, but they're not going to produce the same return on me as AMD. AMD, in my opinion, is going to be the big win. Now, what about SoFi then? Because if I truly believe, the thing about SoFi is that on my private account, my SoFi average is in $7.41. I own so much SoFi. What if hypothetically I'm wrong? You got to remember that. I own more SoFi than AMD, but I can definitely boost up my AMD position here. I would feel comfortable AMD on this profile, honestly, being like 25%, which would lower the weight of SoFi as well. SoFi would go from 33% probably down to maybe like 30 or maybe 29%, unless SoFi does a double up here, which is going to be interesting. So that's AMD, Robinhood I talked about. Palantir, I honestly wish I was a little more aggressive buying this one. Palantir is going to recover. Palantir is going to be over $200 by the time you know it. We know it. I'm just going to hold Palantir here and just really see what happens. But ultimately, whenever I personally see weakness in the market, or if I see better opportunities, like hypothetically, if let's say Robinhood goes up by 50% of this position, and I say to myself, you want to know what? Robinhood has ran up 50%. Let me take some chips off the table here. AMD is stagnated. I'm gonna place those profits into AMD, and that is how essentially you get to like 100K from 30K, is the big profits that Robinhood can give to us, put it into an area that has not grown significantly. So yeah, we have a lot of stuff here. Okay, I did not mean for this video to be 31 minutes. God bless each and every single one of you if you actually stuck on for this period. Please like this video, and I'll see you guys on another video tomorrow. But otherwise, yes, that is daily updates on this stuff, and the market never ever gets old. All right, later.